Good morning. Welcome to the latest edition of Talking Ball. It's the 14th of July. I'm Joe Neighbour, and today I'll be running through the latest headlines and price action on a number of the most popular assets to try and set you up for the day ahead. So, first of all, I am going to run through the latest headlines and take a look at what's moving markets over the last 24 hours or so. The big news item yesterday really was US inflation, which hit a fresh 40-year high. The US consumer prices increased 1.3% for June, with the headline inflation rate strengthening to 9.1% from 8.6% previously, and that was ahead of the consensus forecast of 8.8%. So pretty punchy stuff. And as a result, we've seen the Fed expectations jump on the back of that. The stronger than expected data has triggered fresh concerns over the underlying inflation pressures in the economy, and also the increased expectations that the Fed will now have to take more aggressive action in order to curb inflation pressures. So there were expectations now previously where we were talking about 75 basis points being the rate hike for July, taking the expectation of the overall rate to 3.5%, we now could see a 100 basis point move, and that's what the market is beginning to price in. In terms of the US 10-year yields, we saw them reverse again. However, sharp losses in bonds after the inflation data increasing to near 3.05%, and the dollar posted sharp gains as well, hitting fresh 23-year highs. There was a bit of a reversal later in the session, and we saw the 10-year yield dip towards 2.9%. The Fed bets have boosted the dollar. Yesterday, the CPI number saw a bit of profit taking ahead of it, but then we saw the dollar yen in particular surge to a fresh 23-year high yesterday above 138.50. In terms of rate hikes, we saw Bank of Canada take action yesterday. They increased rates by 100 basis points, taking the overall interest rate to 2.5%. This was larger than the consensus expectation of a 75 basis point hike, and it was the sharpest move that we've seen in interest rates in Canada since 1978. So we are seeing some interesting moves, let's say, from these banks, and they're doing all they can to try and curb the inflationary pressures. Finally, overnight, we saw some strong numbers from Australia on the jobs front. The labour market recorded a surge in employment of over 88,000 compared with the expectations of 30,000. So the expectations at the minute seem to be well out compared to the actual numbers that we're getting on a number of data points. So that is creating some interesting moves in financial markets. Let's first kick off with FX and have a look at what the dollar index is doing. I mean, this is the number one asset really at the moment, the top performing asset, and a clear indication of where we're at the moment in financial markets, and that we are getting more and more investors, it seems, flock to cash effectively. So they're buying the US dollar. That remains at elevated levels. Yesterday, we did see a minor new high, but ultimately closed with a bit of a doji, a bit of indecision really ahead of this big resistance level that we've got at 108.74. But back on the front foot as things stand, it's early in the session, of course, but we're up nearly 0.5% already on the dollar index, and it looks as though we may see a fresh challenge of that 108.74 level today. So no signs of reversal on this at the moment. Looking very strong indeed, and pretty much dictating everything in the FX space for the time being. If we flip the chart around, then we get a pretty good look at what's going on with Euro US dollar. Bit of a doji yesterday. It looks as though the bulls tried yet again to defend parity. This is what we've got highlighted with this red line here. We touched new lows yesterday at 99.98. And that was pretty well defended, getting up as high actually as moving 122 ticks higher from that level to 101.22. Back foot again today, as we can see, looks as though parity is going to get a fresh test. We are just 12 or 11 ticks above that level at the moment. If we get a breakdown here, then we may trigger a few stop losses, because obviously being a big psychological number, you would expect that there will be some traders out there who are speculating on this, providing some support on Euro US dollar. If they all start folding at the same time, then we could see things really kick to the downside, which would be pretty painful if anybody's speculating on Euro US dollar. So do be careful at the moment on that. Looking at cable, that has been holding some support around 118.75. We saw over the last couple of sessions some doji candles form, some pretty long-legged ones to be fair. We made lows down to 118.29 yesterday, but also rallied as high as 119.63. So a pretty large range being created off the back of that CPI number yesterday. But again, we're down nearly 0.5% as things stand. And if we get a close below this level, that could be quite significant and suggest that we are going to see lower prices. Obviously, we've got this key low that we posted on the 12th of July. If that gets taken out, then pretty much just confirms that we are maintaining this downtrend and that lower prices will be seen. The next major level to consider is actually the lows that we saw at the height of the pandemic, which come in at 114.10. So potentially still some pretty punchy downside targets on this. So we're looking at what? Maybe another 3.5% lower towards that number on cable. Dollar yen, obviously that was interesting yesterday because it went on to hit fresh 23-year highs. And as you can see from the chart, it looks really very strong indeed. Fast approaching what may be a psychological resistance level at 140. So we'll mark that up on the chart just to show where it is. Not far for it to travel really, and no signs of it slowing down whatsoever. Already up 1% as things stand today. So a combination of yen weakness and very strong dollar strength. Just in terms of other currencies, there was one that stood out for me today, just looking at it from a purely technical perspective, and that was actually Aussie yen. So the pair overall in a reasonable uptrend, as you can see here, which pretty much started back in December 2021. Bit of consolidation, bit of chop for a bit of a phase, but it looks as though we formed a wedge pattern on the daily chart. And due to the strength that we're seeing today in Aussie and the weakness that we're seeing in yen, it looks as though we've broken out of that wedge to the upside. So that's a pretty strong technical signal, which suggests we're going to see a continuation higher on this particular pair at the moment. So that was pretty much the standout technical setup for me, just flicking through these daily charts on the FX markets today. So let's move on to cryptocurrencies. Bit of a choppy sort of situation here, really. We've talked about this triangle pattern over the last couple of sessions. There was some evidence that it was breaking to the downside, as you can see here with this candle on the 12th. But yesterday, Bitcoin actually had a pretty good day. In fact, engulfing all of the losses that we saw in the previous session to trade back within this triangle pattern. Engulfing candles can be pretty strong reversal signals. I wouldn't necessarily use them in isolation, but maybe we are going to see a little bit more chop here. What I was thinking was going to happen was a breakdown of this triangle would actually signal continuation lower in line with the dominant trend, but that theory has been debunked for the time being. So maybe what we actually have to do is redraw the triangle to take into account yesterday's low. And maybe what we need to see now is a defining break of that low that we posted yesterday if we are to expect a continuation lower. On the upside, if we can break above this level here, which comes in at 21,839, then we may have completed some sort of bottom, maybe a double or triple bottom, as it may now be if we just clone that and bring this other low into play that we saw yesterday. Then that could signify a continuation to the upside or a correction to the upside, maybe as high as 26,137, and then extension of that up to maybe 28,742. So that would definitely be some welcome relief for crypto enthusiasts. Looking at Ethereum, we saw a breakdown from the triangle here, but again, we saw an engulfing candle yesterday, which indicates that there is some appetite to push this higher. Again, potential for a triple bottom to complete here if we see a break above this 1282 level. And then on the upside, we could be looking for moves as high as 1682 to potentially 1930 on Ethereum. And overall, I still think the outlook would be quite bearish, given that we've got some pretty large top patterns in play, particularly in Ethereum. So any upside is likely to be capped in this kind of region, I think, before potentially more selling sets in. But we've got a lot to do before we get up to those sort of levels. So for now, it looks like we're probably going to see continued choppiness in the cryptocurrency space and a lack of any real direction. Commodities now. Let's take a look at oil. This was really interesting yesterday. It had a really aggressive sell-off on the 12th. Yesterday, we saw prices stabilize a bit at this support of 97.07. This is on the Brent futures, sorry, the Brent CFD price that we've got here. Looks as though we formed a head and shoulders top. So the bias is for lower prices down to potentially 85.97, which is the measured move of this head and shoulders top. And obviously, we've seen a break of the trend as well. Quick look at WTI, again on the back foot today. Clearer level of support here to watch. Number of important levels. We've got a 50% fib level. We've got horizontal band of support here coming in between sort of 93.11 to 92.30. So if we get a clear break of this level, then we would be expecting lower prices. A double top formation will have completed on the daily chart, and we can start looking for lower prices, potentially all the way down to the measured move target of this, which is at 58.16. So that would be pretty welcome relief for any of us who are struggling with higher energy costs. But of course, if you are long oil, you need to bear this level in mind, because if it breaks, then it could trigger even further selling on that in the very short term. Looking at silver, I've been talking about this for what feels like a couple of weeks, just because it's holding a pretty significant support level. We've got a 61.8% fib level highlighted in red here. That is from the lows that we posted at the height of the pandemic to the highs that we posted on the 1st of February 2021. We've also got some key highs here previously, which were initially resistance, but now should act as support. And we're seeing prices hold this level for the time being. Yesterday, we posted a green candle, so some evidence of that level being defended. Still needs to do a little bit more for me. We need to see some more evidence of a potential reversal. But if you're a speculator looking at this, then maybe you'd be interested in a short-term trade there, potentially towards 2045, which is the resistance level that we've got here on the chart to target in the short term. Looking at gold. Small signs of reversal yesterday. We did make new lows on an intraday basis, but we closed higher on the session. We're on the back foot again today, down by almost 1% as things stand. So we need to see some evidence of this 1722 support level doing a job. This was a previous swing low here from back in September last year. If we fail to hold this level and close below it, then we could start heading towards this previous swing low here from August 2021, which comes in at 1679.5. So all in all, gold doesn't look particularly attractive at the minute. It can't get any sort of momentum going on the upside, and of course it's being held back by this very strong dollar that we've got at the moment. Okay, let's move it on to the indices then. And let's start off with the DAX. Obviously, the largest economy in Europe is the German market, and it's holding support still. Not really much to report further from what we've spoken about already this week on the charts. 12,431 seems to be a pretty important support level for the time being. Below that, and pretty close by, in fact, we've got a 50% fib level to target at 12,130. But this is the next line of defense that we need to keep an eye out for. And maybe that'll be defended by the bulls a little bit more rigorously before we get a break. But obviously, if we do get a break, then we're expecting prices to continue sliding lower in line with the dominant trend, having completed this large top pattern on the daily chart. If we take a look now at NASDAQ. So this is trading in what looks to be a triangle pattern. And typically when you see these triangle patterns and the dominant trend is moving lower, you would expect it to be a continuation pattern and ultimately result in a fresh break to the downside. Yesterday, we posted a doji candle. Obviously, it was a pretty choppy session as a result of those new Fed expectations created by the CPI number yesterday. So we need to probably see a takeout of the low that we posted yesterday, which comes in at 11,457. And if that breaks, then sadly, we're looking for lower prices on this down towards that 61.8% fib level, which comes in at 10,500. So that for me remains the downside target and would only be invalidated if we can see a break above 12,225. So it looks as though stocks are set to remain under pressure. S&P 500 actually broke out of has broken out of the triangle pattern today. Now, when looking at US markets and making your sort of picture in your mind about where you think markets are going to go. The S&P 500 is, of course, the broadest index in the US, 500 largest companies. So that really gives you a good understanding of what to expect from the overall markets, and pretty much should be considered, the benchmark really on US markets and the US economy. So looks as though we're breaking down here. We've got targets down at the 50% Fibonacci retracement level at 3,500. And below that, we've got a measured move target of this head and shoulders top pattern, which comes in at 3,333. So ultimately, we're looking for further downside into this band of potential support that we've highlighted on the daily chart. So not looking particularly healthy, and lower prices can be expected. Let's finally take a look at the FTSE 100. As I've mentioned on numerous occasions, this really is a pretty poor market at the moment, given that it's pretty range bound. It's not got any defined trend. It is holding up quite well, but if you go down on a stock specific level, then you'll see that like everything else, pretty much it is suffering, and the stocks and the constituents within that market are more than likely in a downtrend at the moment. The reason it's being propped up is that it has a very strong dollar influence, because we have a number of companies that are effectively US based or generate a lot of their revenue in US dollars, such as mining stocks, such as oil stocks, and some of the largest banks as well. So do bear that in mind when considering the FTSE as a potential candidate for trading. Okay, that's that. I'm not going to go into any details on stocks, just because Jamie is the guy that usually does those, and of course we could talk forever about stocks. So if anybody's got any requests, you can feel free to send them over on the live chat on TradingView. Okay, so the next stage of our morning videos is to talk about the gun to the head challenge. So this is where, when normally three of us come up with trade ideas on the video, each of the ideas have a stop and a target, and we just basically set them up for the day. Not, taking much into consideration, just mainly focusing on technical analysis, but making trade ideas or coming up with trade ideas under a bit of pressure. So they are highly speculative. They're not particularly well thought out. It's just a bit of fun, just to try and showcase, some technical analysis, and really for us to, kind of put our money where our mouth is, and be or try and spot opportunities that may work out between now and 9 p.m. tonight when we close these ideas off. All the ideas that we publish, by the way, are on TradingView on our profile, signal_center. So if you want to check those out, please feel free to do so. Yesterday, I actually picked a trade idea on Bitcoin. And typically when I do these ideas, they're only focused on the hourly charts. So I was looking for a breakdown of this triangle, which we just spoken about. We did see a little bit of a break. As you can see here, there was some quite big candles that were posted yesterday, but ultimately it resulted in the price moving higher. So it was actually stopped out on that yesterday. So we'll move on. 1R loss booked on that. So now today I've got to look for a fresh opportunity. Now, typically when I'm looking for these ideas, and I'm going to be doing this on the fly today, I like to use the 10-period exponential moving average, just to try and look for a move up through it or a move below it to trigger some fresh momentum. So I'm going to have a quick flick through a few charts here and see if anything particularly stands out, and then I'll try and get something on quite quickly. What have we got today? See if there's anything standing out. My eyes hopefully won't fail me. Just quickly flicking through. What have we got? Okay, that looks quite interesting. Palladium. In fact, let's go with that. So this is one of the trade ideas that we analyze on a daily basis, and this is one that I actually have spent a bit of time on analyzing this morning. And I was looking to buy at 1914.55. Sorry, I need to bring up the chart, don't I? Yeah, so this is the Palladium chart. Probably not one that you've traded very much, if at all. But for me, it looks like we're trading in a short-term uptrend on the hourly chart, and it seems to be being defended. We've seen a little bit of a correction or pullback over the last couple of sessions, but over the last hour, we've fallen into this 61.8% Fibonacci level that I have highlighted on the chart here. And we've seen a bit of a bounce. So let's go with it, shall we? Let's buy that at the current price of 1939.96. In terms of a stop loss, I'm going to keep that quite tight because it seems as though so far this level has done a pretty good job of support. So let's go quite tight with that. A stop loss at 1911 spot 05. And then we've got to start looking for targets on the upside. So what I would typically look for is horizontal levels to potentially target. I've highlighted this level here. We've got a bit of a swing low. We saw a decent break through that. So we may at some point see a retest of that level. So that comes in at 2080, which would give me a 4.86 risk reward ratio, which I'm very happy with, because if that plays out, that would be a very nice win indeed. So that's my trade of the day, is buying palladium. So good luck if you want to take a look at that, and hopefully it works out between now and 9 o'clock this evening. Okay, day ahead. What do we have to look forward to on the economic front? So yesterday obviously was a big number, the CPI data that came out of the US. Today we've got the producer prices index, which is due out at 1:30 UK time. At 4 o'clock UK time, we've got a Fed Governor Waller speaking, and I'm sure there will be pressure to discuss what happened yesterday with regards to the inflation number, and now what are the Federal Reserve's expectations for the July meeting? Will there be a 100 basis point rate hike like there has been speculated about yesterday? Overnight, so 3 a.m. UK time, we've got the China GDP number, so that could be quite interesting, and potentially set markets moving ahead of us coming in for the European session on Friday. And tomorrow we've got US retail sales as well as the Michigan Consumer Confidence Index. But then we focus next week on the UK inflation data on the 20th of July, and then the ECB policy meeting on the 21st. So that is that for today. Hopefully it's been useful and insightful and will help you set up for your day ahead. I'll be back tomorrow with more. And until then, everybody, trade safe and have a fantastic day. Thank you for watching. Goodbye.